earnings week for retail, but there's still some tech still to come, including one of the hottest names in tech this year and over the last 5 years. What is it? Let's dive right in. We're diving right in with the hottest tech stock this year and of the last 5 years, and it is, of course, Nvidia, ticker NVDA, the one that got away for me. And you can see it's charging here in 2021. It has a great earnings surprise track record. It always has, with just that one miss in 2018. Remember that warning that they gave? The stock plunged down. Turns out it was a buying opportunity there on that earnings miss. And then they've met or beat every quarter since then. Now, year to date, shares are up 132%. So surging here, but over the last 5 years, up 1,281%, one of the best performers during that 5-year time period. Now, how expensive are the shares? They now trade with a forward P of 73. And I know what you're thinking. Who cares? Nvidia is Nvidia. I have to own it. But this chart is giving me a little bit of scariness, fears here in 2021, because it's just a little too hot with this melt up for my value investing blood. But do I expect another good quarter? Yes, I do. Watch for issues with the supply chain, however. But Nvidia is going to be the one everyone's watching this week. But let's switch over to one of the old tech favorites, Cisco, ticker CSCO. Now, Cisco used to be Nvidia in the 1990s. These shares up over 10,000% from 1990 to 1999. So it was Nvidia of old, but recently not so great. So year to date, these shares have rallied and busted out to new 5-year highs. Finally, shares up 27%. That's a little bit better than the S&P 500, which is up about 24% on the year. But over the last 5 years, it's up only 67%, which does trail the S&P 500 by quite a bit. No misses over those 5 years, so it has a great earnings track record, but it just hasn't gotten the momentum like a lot of other tech stocks have done in recent years. Is it cheap? Forward PE is now at 16.5, so that's pretty cheap, especially compared to an Nvidia at 73 times. But I wouldn't call it dirt cheap, and I'm the value investor strategist here at Zacks. So Cisco still kind of just meandering along, but this year not so bad. We'll see if it can get another breakout on this earnings report. Then we're going to switch it over to one of the Chinese companies. It's one of the online shopping giants, JD.com, ticker JD. And I chose this one over Alibaba because this one is much more the Amazon of China than Alibaba is. Even though Alibaba gets all the glory, JD.com is really where the consumer goes to buy. And you can see it's got a great earnings track record. The last misses were in 2018, so that's real impressive. Even during this pandemic, it's been meeting or beating. Shares have come down a bit, but have rallied recently to try to get back to almost break even on the year. That's impressive given all the negative sentiment as the main political party in China has been going after some of these big tech and online shopping platform type companies. So that's why you have the share weakness this year. It's not cheap on a PE basis, even with the pullback, still trading with a PE of 62. So this one is going to be interesting. China's had some resumed of shutdowns over there due to coronavirus outbreaks. And so how much are people ordering online? Is their consumer still buying now that they've reopened? This is all going to be the questions swirling over JD.com. Then let's switch it over to Applied Materials. So this is an interesting chart, just the one miss in 2020. So it's got this great earnings track record of meeting or beating. Then shares here in 2021 went into this narrow trading range, not going anywhere. And I know a lot of people got frustrated, but did you hold on? because now it has busted out, and year to date, these shares are now up 81% year to date. With this great performance, easily outpacing the S&P 500, up about 24%. What does the valuation look like? Trading at 19.8 times. So not super cheap, but not as expensive as some other tech names. So this one, a lot of people are going to be watching it. Can it keep this momentum on this breakout? We will see. Then we're mixing it up with finally another hot tech stocks, Palo Alto Networks, PANW. Great earnings surprise track record. No misses there. A lot of meets and beats, but no misses. So that's all that matters. And year to date, these shares are up 45% and now also breaking out. PE is not so cheap, trading at 71 times. So this is another one along with Nvidia up over 70 times. And you have to start to ask yourself how much you're paying for these earnings. But right now, the market is willing to pay these high prices. So this is another one to watch to see if it can keep this momentum after this earnings report. So as you can see, this week is another hot week, both for technology and the retail side. And we're going to wrap it up with a bunch of retailers here at the end of earnings season. And I'll be bringing you some of those hot earnings charts as we head into Black Friday. Does Black Friday even matter? I don't know anymore. But we're going to find out from some of these retailers what is happening during this holiday shopping season. So be sure to subscribe to get all of our earnings charts and to make sure you're getting all of our charts and exciting videos as we head into the end of this year, because we're going to have all of those end of the year wrap ups and what to look for 2022. So get them all at Zacks.com/YouTube. And I'll see you again next time with some more earnings charts.